In today's video, I'm going to be going through the expectations for June in Australia, more specifically on GDP and unemployment rates. I'm going to be having a look at something that Goldman Sachs and Morgan Stanley have said, and what a competing economist or agency have said about it as well, and what their thoughts on the general economy possibly being at a bottom are at the moment. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be a host through today's trading journey. First thing on the cards that I always look at is giving you guys a bit of an update around COVID-19. We have still got more than 3.5 million infections globally. That number has continued to rise. We've seen more than 250,000 deaths. Again, that number is continuing to rise. But we are seeing some more positivity on the amount of recovered patients so far, with that number well over 1.1 million now. We do hope that again will also rise quite drastically, and we are looking for that R0 point to really say that COVID-19 is on its slowdown. But again, that's going to be some time and it's going to take a while to get there, unfortunately. Now, some interesting points about COVID-19 and some of the stuff that's gone on around the pandemic from a very different perspective at the moment. I've just put on the screen here a couple of points I'd like to make about it. Now, the stuff that's gone on, we've seen the US death toll going up quite a lot. The Trump administration has said that they are expecting to see the death toll rise beyond 100,000. So that's obviously indicative of what they're expecting. It's concerning to say the least, but that is kind of what it's going to be at this point in time. We're already seeing such a big rise across the globe in the amount of deaths, and the US is really the epicenter of this situation. Now, something else that's come across my desk is that Trump has promised to get a report of sorts put in place that looks into the origins of COVID-19 and if it's been mishandled by any parties involved. Now, naturally, we're seeing a lot of disagreement between US and China at the moment, and really the rest of the world versus China. So this is going to be problematic for a while. It is potentially going to cause some greater tensions than we are used to. And I do have a feeling that it is likely going to affect trade and what the trade agreements have been so far, especially considering just last year we were having a trade war between the US and China, affecting a lot of price in commodity markets and in general markets as well. So this is going to be an interesting one to see how it plays out. So far, China has been pushing back pretty hard, saying that no, this isn't going to happen. But the rest of the world is saying that they want it to happen. So who's going to win out here? Who knows? But I do feel that we are going to end up getting some sort of resolution on where it's all originated, which might give some people some peace and comfort. But at the end of the day, it's also potentially going to damage the economy if it ruins trade relationships. The other part of this is that New Zealand has actually reported 0 cases originating for the first time ever. Since the beginning of this whole pandemic, they have obviously been quite contained, lockdowns going into it immediately, they've closed borders, and they have been able to subdue the amount of infections going around. But now they can actually say, for the first time, that they have had on one independent day no new infections recorded. Naturally, it's still early days. Australia and New Zealand have both done very well to try and control the spread of the virus, making it much easier for the hospital system when the virus does eventually spread around the globe even further. However, this idea is really being put in place that if they can get it down to 0, then hopefully that means that we can stop infections from occurring altogether at this point in time. But yet to see on that. Now, the next thing that I'm going to give you a bit of wisdom on today is on what's going on with the 10 and 10 scenario. So Josh Frieden, the Treasurer of the Australia, has said that he is expecting a 10% drop in GDP by the June quarter of this year, and that we are likely to have an unemployment rate of approximately 10%. Now, this isn't really surprising. We knew that we were going to start seeing some sort of bad numbers coming out. Most of the data that Australia has had has been coming in from before COVID-19 really kicked off. So now we are starting to get the negative data come in. Now, whilst that is coming in and we are seeing all this negative data come through, that it really has been a case of looking at what the situation at hand has been. We know that we can see that there's been a high unemployment rate. Do I think it's going to be 10%? No, I actually think it's going to be higher. I would not at all be surprised if we start seeing figures climbing into the 15% mark. The longer this sort of lockdown continues, the more we see businesses going under, and just because a business goes under doesn't mean it can restart tomorrow. So that is a problem, because that means you're then going to have not only the employees that have lost jobs because a business has run out of money, but you're also likely going to have the employer now becoming an employee and looking for a job himself. So I would expect to see this number rise more than 10%. If it's an approximate right now, then that might be the case, but I would imagine so that by the end of sort of September, we might actually start seeing some higher numbers, especially when you consider what's going on in the US and the employment situation over there. With the estimates that we're expecting to see this weekend or on Friday night, it is likely to be in the 20% range. So I do think the Australian situation will kind of start leading up that way, but it's probably still a little bit early to tell. But I think that, with the math that's there and the numbers that are coming in, it's very likely to happen. Now, the other part about this is really that Australian policymakers, it's just something I've noticed, are really, really hesitant to actually say the word recession. And they're saying that it's a contraction. They're saying pretty much everything else that they can without saying the word recession. It's almost as if they have a fear of the word, knowing what's going to happen. Now, usually when you think of it from an economic point, a recession is really just a point of where you have 2 contracting months in a row. Whereas in this instance, when you hear it to the general public, that term of recession usually is associated with bad things happening. And they're right, because every time we do start seeing recession in the media, you do start seeing a bit of panic occurring. But the rest of the economy in Australia is not looking all that healthy right now, especially with all the lockdowns. And we are seeing this idea that the Australian public do have some pretty poor expectations. The most recent surveys that we saw are showing much worse situations or optimism for what's likely to come over the next 6 to 12 months than what US respondents are actually thinking about their own economy, who have had far more deaths and far more cases of COVID-19. So it's going to be interesting to see what really happens in the next couple of weeks, and especially with the unemployment situation, how is that actually going to affect consumer sentiment, and are we going to see mass amounts of people being laid off and concerns about what is to come next? I think we are likely to see that. Now, the next one to sort of talk about today is that Goldman Sachs and Morgan Stanley have both said at separate times that they think that we are currently at the bottom of the market and that things are likely to turn around from this point on. And they're saying that because they're getting some data in that sort of shows some levels of recession being over. But how can that really be the case? We haven't even finished the lockdowns, let alone found some sort of a vaccine or medication that might help with COVID-19. And there's certainly no talk of air travel recommencing. So how can we expect that this is likely to finish now and that we're going to start having a recovery? We haven't even gotten all the data in yet. So this just seems way too early from my point of view. And this is someone from the chief economists of Morgan Stanley and Goldman Sachs that are saying this sort of stuff. It's just a little bit insane to me. I mean, it might be true. It could be, they could be right. They could be the bottom, but I just don't see it. And neither does this guy here, Carson Block. Carson Block is the head of Muddy Water Capital. They run a lot of investment stuff. He's tend to be known for being a short seller and quite a successful one at that. And his belief on what Morgan Stanley and what Goldman Sachs have said and a variety of other sort of things looking at the economy is, why is the S&P 500, is basically what he's saying, going up? Why is that going up? It shouldn't be going up, it should be going down. And there is no logical explanations for that to be occurring. So we've got professionals on both sides of the banking world here and the finance spectrum saying very, very different things. We've got economists saying, yep, we're at the bottom, but then we've also got economists saying, no, we're not, and it should be much, much lower because the valuation just isn't there. And I agree with Carson in this. He's basically said that how can stock prices be up so high and their valuations be so good when the rest of the economy isn't doing well and isn't buying things and isn't putting them into business or giving them growth or anything along those lines, and the only things that are coming out are in terms of bailouts. And he is someone that is technically kind of against bailouts, or a couple of other people that are against bailouts, and I tend to agree with that. If you put a bailout in thing, you just kind of put a band-aid fix over it and it doesn't resolve the problems in the near future. It just kind of builds a bubble on a bubble. So at this point in time, I'm still firmly short on most of the markets that I'm seeing, and I'm expecting, even though that we have got these big rises going on, and that is nice to have seen, and there have been plenty of opportunities to make some sort of positions on the way back up, I don't think it can be sustained. I think we are likely to see another fall before we start seeing a recession recovery, as Goldman Sachs puts it. Now, for the news ahead of today, I will likely give another update this afternoon on the news tonight and what's happened at 3:30. At 3:30 this afternoon, we have an RBA announcement and an RBA statement coming out, so it'll be around the cash rate for Australia. I am curious to see what happens there. I don't think they're going to change rates. I believe they will be putting more funds towards asset purchase programs and quantitative easing sort of levels, but it will be determined at that point in time. So I'm going to keep an eye on what's happening there and give you a bit of an update later this afternoon. Now, of course, don't forget today is a bank holiday for Japan and a couple of other Asian countries, including South Korea. So keep an eye on what's happening there. Have a look for the rest of it throughout the week. We do have another bank holiday tomorrow for Japan, and we do have another 2 on Friday when NFP is due, but it's not going to be for Asian countries then, and I'll give you a bit of an update about that on Thursday night anyway. So if there's anything you want to hear more of, or you've liked some of the content in the videos and want to get in contact with me, feel free to shoot me an email at talktoal@acy.com. And of course, like and subscribe to the video so that I can give you more great content from ACY Securities and myself in the near future. Have a great trading day ahead, and I'll see you all again this afternoon with an update from the RBA.